To round out the themes of the year are prediction markets, alongside stablecoins. Prediction market apps were among the few crypto-native themes that have branched out to achieve mainstream adoption. Jump-started by Polymarket's breakout moment during the 2024 elections. Momentum continued in 2025. In 2025 alone, prediction markets, including Polymarket and Kalshi, raised a combined $3.6 billion in venture funding and have generated $28 billion in trading volumes, a 4.3x growth over the previous year. As a share of total crypto spot volumes, prediction markets make up nearly 0.4%, up over tenfold from the beginning of 2025. Following Bitcoin's fourth quadrennial halving event in 2024, Bitcoin miner revenue saw a small increase in 2025, benefiting from the positive price action of Bitcoin. Miners are projected to generate $17.2 billion in 2025, compared to $14.7 billion the year prior. Despite the increase in total annual revenue, fees as a share of total revenue, which is made up of block subsidies and fee payments, saw an 82% drop in 2024. Miner fees as a share of revenue were approximately 7%. This year, that share has dropped to roughly 1%. This sharp decline stemmed from the unwinding of last year's Bitcoin on-chain frenzy driven by ordinals, BRC20 tokens, and runes. Despite volatile price action for well over a decade, Bitcoin's hash rate has consistently grown as new mining entities enter the market to compete with ever-evolving mining hardware efficiencies. In 2025, Bitcoin's hash rate reached 1 zettahash for the first time in history, leading to some estimates suggesting Bitcoin now makes 0.80% of the world's electricity consumption. For Bitcoin mining pools, Foundry USA, the 5-year-old subsidiary of crypto conglomerate Digital Currency Group, remains the world's largest, accounting for 30% of the market share. In 2025, most publicly traded Bitcoin miners saw significant gains as they capitalized on the ongoing AI boom and accelerated their pivots toward offering AI infrastructure and services. The average return of top publicly traded Bitcoin-centric mining companies, YTD, is 62%, with the median returning 16%, compared to Bitcoin's negative return for the year. For example, the best-performing Bitcoin mining stock in our tracked group this year was IREN, which completed a full AI pivot to providing data centers for AI companies, initially signaling its intent to provide AI data infrastructure in early 2025. While Bitcoin mining revenue this year was saved by positive YOY price action, the popping of the on-chain Bitcoin bubble saw fees collapse, making Bitcoin miners increasingly reliant on the Bitcoin price increasing and an ever-decreasing reward subsidy to sustain their businesses. As AI infrastructure becomes a more attractive business line for miners, there is a growing risk that firms will gradually divert resources away from Bitcoin mining, potentially reducing the network's hash power and weakening Bitcoin's security over time. The Bitcoin community will continue to need to build an ecosystem that boosts demand to use the network, against a backdrop of broadly weak token performance in 2025. Layer 1, L1 activity, increasingly split across distinct roles and narratives. Speculative flows concentrated on a handful of high-throughput venues, while Ethereum deepened its position as a settlement and data availability hub through L2-driven growth and falling fees. Stablecoins cemented their status as the ecosystem's killer use case, culminating in the launch of purpose-built, stable chains. At the same time, privacy-focused, performance-optimized, and chain-oriented L1s sharpened their value propositions, setting up a base layer that is more fragmented but explicitly specialized heading into the next cycle. Retail demand for L1s in 2025 was still overwhelmingly driven by speculation, with the meme coin supercycle continuing to provide the clearest expression of that theme. High throughput, deep liquidity, and low fees made Solana and BNB chain the natural venues to accommodate this flow. Across most of the year, Solana maintained a clear lead in L1 DEX volumes, only briefly ceding the top spot to BNB chain in June and Ethereum in August. This dominance was heavily front-loaded. January marked an all-time high for Solana DEX volume, with the official $Trump and $Melania memes accounting for nearly half, approximately 48.5%, of that activity. Pump.fun alone contributed around 23% of Solana's YTD app revenue, turning launchpads into a core part of the network's economics and reinforcing its reputation as a casino chain. As the year progressed and meme coin momentum faded, Solana's DEX dominance gave way to a more balanced split with Ethereum and BNB chain, highlighting the network's dependence on a narrow set of meme catalysts.